into our opportunities as we always do here in the morning show. Again, as we talk at 8:45, we'll be digging into our breakout, our breakdown names when we talk a little bit about momentum at 9 o'clock when we do the runner. And we will talk about AI as well. Very important. Got a nice little event coming up tomorrow that I'm excited about. We'll talk a little bit about that as well. Let me make sure that I am sharing my screen correctly. Is this showing? What is going on? It is not. One moment. The heck? That was weird. Let's try again. Got it. All right. We did it. All right. Painted black. You're back. Good. All right. We're good. That's what we needed. All right. So once again, why do we do what we do? Well, we're here every single day because at 9:30, you are the exit liquidity for this market. And it's good, an opportunity for you to just recognize that the way that this market moves, it's all about positioning overnight. And what you see in the pre-market is not necessarily what we're going to see during the day. We are on the verge of 25,000 for the NASDAQ, S&P 500 trying to push toward that 6,800 level this morning. And the VIX currently sitting around 18, so still subdued under that 20 level. We'll talk a little bit about volatility in a moment. In addition to the move on oil, we are seeing energy rebound a little bit thanks to inventory levels and suppressed production in certain OPEC countries. And as you go through everything else, lumber, big day for lumber. All right. Let's go. All right, momentum. So our screener, as you know, every single day we take the number of stocks in the S&P 500. We deduct the stocks that are breaking down from the number of stocks that are breaking out. And our intraday number, all the stocks on a bell curve, is at 5. So this is just kind of the way that this market is operating right now. It has been just a nice slow burn higher. If we go back and we look at the time frames on the S&P 500, we just continue to burn. We just continue to burn higher. There's really nothing else happening in a world of ongoing stronger liquidity. We're at 667 on the SPY, and it's just been this very strong progressive move above the 20 and the 8-day moving average for the better part of 4 months. We have not had a 2% down day since April. And that is exactly the point, right? That is the proof that momentum remains extraordinarily strong. It is the proof that liquidity remains very strong and the continuation and holding above that 8-day moving average. I can't stress, somebody asked me to do this. Fine. I can't stress enough what it means when an index like the SPY remains above that 8 and that 20-day moving average for a period of months. It is strong liquidity. It is strong equity movement and the continuation of trend remaining the idea here that, again, in this environment, every 2 weeks, you have a huge wave of capital coming in from retirement accounts, passive investment. The SPY continues to remain strong. All of those stocks on the SPY continuing to move above their 20-day, 8-day moving averages. A lot of strength in Nvidia, a lot of strength in Microsoft, Apple, Amazon, etc. The Magnificent Seven, same thing, right? Peeling above that 20 and 8-day moving average, more capital flowing in, and equity valuations not really mattering until they do. And that was kind of the point yesterday when Jerome Powell spoke. We'll talk about that in a moment. But once again, the market will defy logic and it will continue to burn higher so long as the liquidity profile of the market remains strong. And what I mean by liquidity is the way that Michael Howe defines it, which is all capital in the world sloshing around. The US equity market was 33% of the global index about a decade ago. It's now 72%. So the United States is the core driver of all equity prices and money flowing around the world continuing to pour into US equities because that's where the momentum is. So just be aware of this. If we break down, if we have a flip on this figure, what we then look for is a move on what is called the NGD. This is the microsector's triple inverse leveraged ETN. Don't get caught up on it. Don't trade it. Just recognize that every single time this breaks its 20 and its 50-day moving average, something is wrong. And in the case of what we saw in April or what we saw last year, when the Nikkei had its worst day since 1987, this is leverage leaving the system, right? When this breaks out, this is leverage, and it's going to be the inverse of effectively the SPY or the Magnificent Seven, breaking under the 20 and 50-day moving averages of the S&P 500, and that continued drain on liquidity and leverage in the system. That's where the crisis happens. So don't try to be first over the wall. It's a very difficult market to short. Your first move is going to be under the 8 and potentially to the 20 and retest it. And if we break back down to the 50, that's where there can be concern. That where there is concern around a leverage move and a race to cash. All right. Good morning, Secret Agent Charlie. Welcome. 40 points. Huge crash, right? It was a huge crash, photo guy. Once in a generation buying opportunity. I mean, cats chasing dogs. All right. Big stories today. Again, yesterday, Jerome Powell crashing the market yesterday. Oh my gosh, just scaring the heck out of everybody. He said that stock valuations were, quote, fairly highly valued. There was no clear path for future cuts. And the market didn't like that too much because the market likes money. The market wants more capital flowing into equities. It wants more capital sloshing around. And cutting interest rates impacts the quote unquote collateral multiplier of the global financial system and the repo markets. And that leads to more leverage and more buying of FANG stocks. That's it. Valuations of PE ratios of companies like Nvidia and Microsoft and Apple and Amazon, they're completely detached from reality. And it's all a reflection of domestic liquidity. It's not about the price to earnings ratio, it's about the price to the amount of capital sloshing around in an equity market. And in this case, the United States is 72% of all liquidity in the global markets, $180 trillion. $180 trillion. So once again, markets continuing to remain strong. We have these kind of down days, a little bit of profit taking. Keep an eye on the SPY, keep an eye on the Qs. Definitely keep an eye on Boeing and Lockheed Martin. We talked a little bit about Boeing yesterday and kind of where it's been shopping around. Coming back, pushing above that 8-day moving average. And what we're looking for is that 8-day moving average to pass back above that 20-day moving average. And then we're looking for a short-term continued move higher for Boeing. Same thing with Lockheed in play. Lockheed has just been pure momentum since July. And once again, it is a reminder that when these names like Lockheed Martin get into oversold territory, this chart shows you everything you need to know. When Lockheed Martin gets down into oversold on the RSI and the MFI, remember the RSI is the relative strength index. It is a price momentum oscillator, and this is strength of price. MFI is volume and price. It's an enhanced version of the RSI. So oversold on the RSI is 30. Oversold on the MFI is 20. And what do you do when you are oversold on a name like this? And again, Lockheed Martin is a company where 97% of its revenue comes from the United States government, right? It's locked in, it's guaranteed. So when you get oversold on names like this is where you're selling spreads to the downside because, again, the sellers are exhausted. You had a move from 500 down to 420. You had another move from 474 all the way down to 407. Again, exhaustion on the selling side. And that's where you're selling spreads 10, 15, 20% lower than where the current price is. Your goal is to find a 20% return, an 80% probability of profit, and an annualized return of around 100%. So once again, we're going to just let this continue to burn higher. We are currently overbought on Lockheed, but we will just be very patient and once again, set a notification when Lockheed gets into oversold territory again and presents that trading opportunity. On top of this, LAC, oh my goodness. Well, once again, as we've noted, the United States government is now in the land of 18th century mercantilism. And now we're just going to start buying national resource companies. Lithium America is popping after news that the United States government is looking to take another equity stake in this name, currently 10% equity stake. And why does this matter? Well, it's a company that is linked to Thacker Pass. Thacker Pass is, I believe, going to be the largest lithium mine in the United States out of Nevada. Took a little while to get this thing off the ground. I'll put it that way because once again, we operate in an environment where environmentalists can shut down production pretty quickly if they find something to protect. And in this case, it was a rare buckwheat. And we tied up the legal system for years to preserve that buckwheat rather than pulling the lithium out of the ground. They're trying to do the same thing in the Permian Basin with lizards. This is a fun time. Anyway, Lithium Americas, what's an opportunity here? Well, a lot of people are going to chase this stock. And my argument is don't chase it. You don't have to chase it. Instead, what you can do is you can look for any opportunities to potentially set limit orders on the stock, or once again, you can sell put spreads, assuming that there is a more liquid options chain. And in that case, what you will be looking for, and we have to dig a little bit into the world of the options chain, we would be looking to sell spreads or puts on LAC at a much lower level. And in this case, if you go out to November right now, you might be selling the $4 put and buying the 350 put, or you might advertisement, advertisement, advertisement. You might be looking for this market to open and go again down to where the stock was trading yesterday. And if you end up in a situation where you're selling the 350 and buying the 3, there's a potential opportunity here for you to make 20, 30, 40% and take possession of the stock if it were to pull back at a much lower level than where it is. Rather than chasing momentum, you're simply taking advantage of what the market is giving you. There will be obviously a lot of chop on this stock as well. This is another good name to be trading volume weighted average price around. And the other stocks that are related to this today are Albemarle, ALB, and General Motors, GM. All right. Finally, oil prices, they're on the rise a little bit today because of that inventory drawdown. Crude stockpiles fell by 3.8 million barrels. So even in the face of the end of the driving season, crude stockpiles declining, Brent and WTI extending gains because of supply concerns. In Venezuela, Iraq, Kurdistan exports are constrained. Keep an eye on XLE, Chevron, and of course Exxon. There will be some swing in this today. Look for moves on those standard deviation lines that we have talked about on a fairly regular basis. And again, I'm not necessarily interested in owning anything in the upstream oil and gas space because of the volatility associated with it. But I will state that I am looking for the MFI on Exxon to improve, which would make me a little bit more bullish and would be looking for a trade from somewhere around that 11.14 level, or forgive me, $114 level, and selling to the upside to a potential retest of these recent highs in June and July. Just be cognizant, be very aware of RSI and MFI on Exxon and anything that is upstream. When we are hitting these overbought territories on Exxon and Chevron and Permian Resources and the XLE and all everything associated upstream oil and gas. When we hit these peaks, that has been the time to take profits because again, we are seeing an overextension on the trader side, stocks moving into overbought territory, and then reversals. And you can see multiple reversals that have transpired with Exxon, one in April, one in June, one recently to start September. And don't be shocked to, again, if we get to RSI over 70, MFI over 80, or approaching those levels, look for profit taking. All right. So, did I take Tylenol? What's happening? Tex is asking about the housing stock. It's TPH, TriPoint. Right there. Not going well. Once again, as I said yesterday, all of the optimism around the rate cuts, and now these stocks are moving toward oversold level. And I want to you to keep in mind something. Pay very close attention to these names as well on that RSI and that MFI. When we get extended into oversold, there will be opportunity to sell spreads to the downside on these names. 9 o'clock. What's it mean? Charlie knows. Charlie knows. All right. We'll talk about the runner. Let's dive in. Okay, so as I have noted, and I want to download this real quick and just chop it into the individual thing itself. Desktop. Haha. Look at that. Leave. If only I could operate a computer. You would think, after all this time. Well, we're going to start in the energy space. PUMP. Sounds like a 50-cent song. And you see the momentum picking up here, breaking above that 50-day moving average. That's going to be my line in the sand here. What I'm looking for on positive momentum, RSI, MFI improving, crossover positive on that ADX. This is a buy the stock and set a stop. 4%, 5% stop back here on PUMP. Cue the steel drum. I'm going to buy this morning, set a stop back here, 492. Looking for a little bit of a run, a little bit of a pump, if you will. All right. PUMP. It's going to be stuck in my head all day, 50 cent. HIMX. Yeah. So once again, with equities extended the way that they are, and we're looking for names particularly linked to the semiconductor side. Same thing here. This is a stock that I don't trade options around. I don't think it really has a massively liquid options chain, but I do like it from a momentum perspective, particularly on these 8-day moving average moves. So same thing, buying the stock, setting a stop, and I'm going to set the stop back here at around that 20-day moving average. So we had the crossover here. That's where I would have preferred to have been in. But right now, with continued strength and momentum, going to buy here. You have a crossover 2050 EMA crossover happening right now, showcasing strength and continuation and momentum. So buying here, setting a stop back at that 840 level and looking for a continuation and rebound and looking to exit if we can get back to these near-term highs of around 984. So PUMP and HIMX become buy and hold for right now, built around momentum. On the downside, ZIP. What do you do? I don't know. ZipRecruiter. I didn't even know this was public. Man. And please tell me that this was a SPAC. Oof. ZipRecruiter. Look at it now. Yeah, that's a short. Any options that you can get $5 level, $5 put? Set your stop right back at the 50-day EMA, and you see the breakdown continuing in price, RSI, MFI, all weakening, ADX crossover, trend going in the opposite direction. Looking for a downside to around $4. Weakness creates more weakness. I did not know ZipRecruiter was public, and now I'm just sad. Oof. Ugh. That is a SPAC, isn't it? Ugh. Yikes. Are they even profitable? Nope. Price to sales, 0.92. Book per share, negative. Not good. $500 million, $400 million market cap, losing $35 million. But that doesn't tell you about the state of the job market. I don't know what will, but I assume that the AI trade is also consuming them as well. ZipRecruiter. Yikes. This company might not be around in 5 years. It was a good run. QXO. Well, that's another terrible chart. Wow. What is happening? This had a nice momentum move earlier this year, but now there's your breakdown. Continuing, there's a crossover 8 on the 50. Not good. So QXO looking to the downside as well. I'd be looking for a retest down in that 1820 to 1830 level. Short duration move. We'll dig into this one a little bit later, but again, your stops are going to be back here 2044 if you're shorting this to the downside. All right, other things breaking on the move. Stocks breaking out, technology remaining strong, basic materials remaining strong. Thank you again to the Lithium Americas deal, but also keep in mind that we have ongoing expansion in liquidity and capital in the financial system, and therefore gold's at 3,800, silver's at 4,438. It's just going to keep going. It's just going to keep going. Blake talked about this the other day with me. He said, look, this is stagflation. This is stagflation. So the continuation and the strength and the trend in gold remains extraordinarily strong. We're seeing the same thing happening with copper. China continuing to provide support to its economy. And that again, anytime that they engage in any level of stimulus, it is supportive for copper prices. The United States is a financialized economy. So when we engage in any level of stimulus or we create new programs to provide liquidity to our markets, it pushes up banking stocks. In China, it's on the manufacturing side. China is the manufacturing hub of the world. So stimulus pushes copper prices higher, pushes individual metals and, of course, other commodities higher as well. And that includes the softs, and it also includes things like lumber. Oh, coffee took over today. 2.9%. Coffee. All right. On the other side of this, again, momentum remaining strong in AI, metals, biotech, and uranium. Strength, obviously, in the lithium space as well, breaking out on the technology and the industrials. That's why we talked about keeping that close eye on Boeing. What's breaking down? What's struggling? Well, again, it's defensives. And it's defensives because a couple of moving parts. One, that interest rate trade has not paid off. The expectation for particularly a large number of these defensives is that they're going to do better simply because we're cutting interest rates. But I just want you to look at CAG, ConAgra brands, right? People have asked, when is this stock going to get itself together? When is this company going to get itself together? And the answer, unfortunately, is there has to be a justification for a rotation into consumer defensives. And that usually comes at a later stage in the liquidity cycle. If I were to look at the current liquidity cycle, the overall expectation is that we will peak sometime next year, which is bullish right now if you're in phase two in the banking and the commodity space. Plus, technology continues to do very well as well. AI trade consuming everything. It's going to be the backside. It's going to be when we start to see volatility. And in fact, when we see these events, these big negative events that are transpiring in the financial markets, you will see rotation into the defensive. So when the market was bleeding off the way it was on excess liquidity back in February and March, Conagra went from 23 up to 28. A lot of defensives did well then. And that's typically how these markets operate. You rotate out of those high beta names and then transfer into the consumer defensive. When you get to the end of the liquidity cycle, when there are deep concerns about the state of the economy, and we go back to maybe the 2022 gilt crisis, or we go back to what happened in 2015, or we go back to 2008, money will then rotate out of defensives and will then turn toward uh, duration on bonds because interest rates will go lower. In addition to that, the overall expectation is pretty much the same. You start actually looking for distressed credit and things that are completely and totally haywire, because that's where nobody wants to touch any of this stuff. And that is ultimately where we start to see some level of liquidity injected by the central bank to provide support to the markets. And all of those distressed assets are effectively bailed out. That was a great lesson in 2020. There was a lot of stuff. Things were going for like 8 to 9 cents on the dollar. You know, deals of a lifetime when it comes to distressed credit. And sure enough, once those bailouts came in late March 2025, a lot of that stuff was made whole again. And the people who were smart enough to buy it did very well. But it's going to be a couple of years. It'll probably be 2, 3 years before we get into those types of environments. But once again, just want to make sure that you know that's how these markets have behaved since 2008 at least. On the other horses to watch today, PBYI. Puma Biotechnology. This name has popped around quite a bit in the last couple of months, and I like to see the strength and improvement on the RSI and the MFI, crossover positive on ADX. I don't know much about the company, but as you can see, we're taking another swing on it. The stop back at the 450 level, right down around that 50-day, and we're looking for a retest or another opportunity or shot to the upside, aiming for $6. So willing to lose 20 cents to make $1.30. And finally, on top of this, OSPN. No, not ESPN. OSPN. One span. What do you do? Technology, software, strong momentum. Keep an eye on this MFI if buying this, if we're making this trade, and you take a look at what the suggestion is here, we're looking to break that 1632 level with the target of 17, stop at 1540. The key thing to keep in mind here is you want to watch this MFI. If this continues to break down, if the stock is moving higher with less volume, that is a little concerning, and it could suggest that that trend is not sustainable. But right now, what I'm looking for is another retest on this RSI. Pay very close attention to the RSI here, looking for a move back up to that overbought condition. And as you have seen, once we hit that 80 level, or forgive me, that 70 level on RSI on names like OneSpan, we have witnessed sell-offs. So again, trying to make a buck, $2, and getting out of the way. Would think Conagra a candidate for a covered call campaign soon? I just can't get into it. I can't get into it. It's just not, and it's by all mathematical analysis, it's cheap, but this is exactly the problem. It's got a 7.7 dividend. So, what do you see here? I mean, look at the performance on this thing. Gosh, down 34%. This will be a name that we will be watching specifically around the 13Ds and 13Fs when they come out in, I want to say that's November, right? 7.6 times earnings, price to book under its book value, price to cash flow under 7. Like everything here screams value. And yet it looked like it was a value at 24. And here we are at 18. So once again, it's just a reminder to pay very close attention to individual equities and pay very close attention to these names and understand where you are in the liquidity cycle. And we're still in the first and second wave. There's 4 waves, and that was put in the next 36 months article that we posted a couple of times. This stock is going to have to break above these key moving averages. Otherwise, I'm not buying it because again, this thing could go to 4 times earnings. What's going to stop it? Who's going to step in? Now, even in this world, you would think that maybe an activist would try to tackle this. This company is way too big and way too messy. Very clear. $8 billion market cap with an enterprise value of 17. What does that tell you? Does anybody know that? What does this tell you? That the fact that their enterprise value is double their market cap. You want to take a guess? It's Bang. There you go. Tall text is on it. Debt to equity is 0.93. Enterprise value is all money, all capital in the structure. So it's all their debt plus their market capitalization. It's extremely leveraged. It's extremely leveraged. So once again, these debt issues are legacy issues for the company. And even though I see a dividend like that at 7.7%, I say to myself, there's 50 other places I'd rather put my money if I'm trying to get a yield. I'll just buy TFSL. TFSL's paying 8.4%, and the stock's worth 30. They just have to finish their thrift conversion one day. I'd rather just have that. I don't need Connect. I can buy FSCO, private debt. There's a lot of other things I can purchase, right? 10.6% on this, private credit. I don't need CAG. I don't need the headache associated with their debt. I don't need the headache associated with trying to catch. It's really not even a falling knife. It's like a drunk falling down a hill, just rolling down the hill. And just like, how long is this hill? It just keeps going. Just keeps going. So I'm not going to buy it. I'm not going to short it. I may wait until we get maybe a retest of that 50-day moving average and then, look for continued weakness in this name. All right. So last thing, tomorrow, for anybody who missed out on an opportunity to join us and understand the entire financial market through a single name, we're running this back. And we're doing this tomorrow. It's at 2 o'clock. This is the AI Freedom System, and I'm going to throw the link in the chat momentarily. Tomorrow at 2 o'clock, I'm hosting a closed door session on a trading system built around AI. Now, if you are curious about AI, if you're curious about individual equities and understanding how to, again, see the whole market through a single name, it's not Tesla. This isn't gold. We're not focusing on crypto. Do me a favor. I'm going to put the link in the chat. Join me tomorrow because this is already turning into it's taking on a life on its own. I'll put it that way. Like people are clamoring for this. So again, we're going to focus on AI setups that no one else is talking about. We're going to focus on specific actionable moves that you can use. We're not focusing on long-term hope, right? And this will, lay out some of the trades that we've made recently, up 95%, 53, 54%, and again, 35%. So link is in the chat. I will be live tomorrow at 2. Our seats are limited for this. Obviously, we had a huge turnout last time that we did something similar to this. And once again, in this environment, I'm just going to point this out, and I'm going to point out why this is so important, why you should put your name in, add your phone number. We'll text you tomorrow, let you know that when we're going live. If you don't want to put your number in, just put your email in. We'll do the same thing. But here's the thing, very important. Last week, I pulled a chart up and I explained that Goldman Sachs has a index of 109 AI stocks. The valuation of those stocks, all of them total, is $29 trillion. The US economy's GDP is about 30. So all of these people who are investing and focusing and trading AI are making, or valuations, the same amount of money of our entire economy. Meanwhile, our economy is being undercut by AI, and the average person is going to potentially lose their job because of AI. So this is not just about trading. This is about recognizing and seeing where the entire world of the stock market and the disconnect between the equity market and the economy lies. And we'll talk a little bit about that tomorrow. But again, click the link. We'll get in there and we will see you once again later today at 3 o'clock. I will be back at 3 o'clock and again tomorrow at 2 o'clock. Don's coming up in a moment. I hope everybody has a great trading day. Thank you as always for joining me, and I will see you tomorrow, Market Masters at 8:45. Have a great day, everybody.